All right, so welcome in. It's the Power Hour stream. Again, we're gonna kind of look at flow. If you got any requests, charting requests, flow requests, unusual wills, questions, feel free to drop them in the chat. If you got any flow you want me to take a peek at, drop it in the chat. Otherwise, we're just gonna kind of look around here and see what's kind of coming in. It's been a little slower this afternoon, but the more flow you guys pop in there, the more we'll look at. So looks like we got Intel up first here, so we will take a peek there. I'm gonna look for, because you didn't drop a specific contract, so I'm gonna just kind of look at Intel overall here. Let me just clean. Actually, I'm gonna leave those up here. All right, let's go look at Intel. So Intel, and I need to mute this. All right, so Intel here. Let's take a peek. So today, okay, getting a lot of net call premium. Obviously, we are up 3.2% there. And I need to pop this over here too as well. So so I can mark down the names that we're looking at, just so people can kind of guide through the video here. So Intel here, a lot of net call premium, getting good call volume, put premiums pretty flat here. Just want to look at the past 7 sessions here. So a lot of call outflow here, but you're getting some good net call premium here to the ask side today. Again, just because it's ask side net call premium doesn't mean it's going to go up, but let's take a peek at some of the contracts we're seeing here. Just off the bat here, I'm going to kind of remove these 0 days and we'll do a little deeper dive here. But again, most of the stuff here is going to be 0 days for your highest volume contracts. Let's just take a peek at the highest open interest here. So you got maybe that 618 here. That might, I don't think that's going to be a single whale, and it doesn't look like it. A lot of open interest on this one, so you're probably not going to have a big single whale here. Looks like there may have been an original single whale here, 27,000 contracts there, and another almost 27,000 there. So my guess is that first whale exited there for a big run up there. I just want to double check this one. So that was on the 13th. I want to see if that volume actually dropped off. So oh yeah, so that volume actually did drop off. Most of it did. So that whale closed for a loss, actually, for that big rip up there. Let's see what we got that is not a 0 day here. So let's look at our volume greater than open interest. We don't want to look at 0 days, so let's kind of take a peek here. And not really seeing a whole bunch here. It's a lot of kind of mixed splits here for your bid and ask side volume. So let's kind of clean this up a little bit. Let's do 60%, at least 60% ask side. So that cleans it up a little bit here. Seeing a lot of ask side premium now, obviously. The 20% in the money one, probably wouldn't try to follow that one. That is a little deep in the money for me. So the premiums are a little smaller here. I do like this 12, 26, 30 call here. It's a bigger premium here. Oh, it's 20% in the money. That's the one I was looking at. Duh. We will look at it just for fun. Just for fun. So 140 contracts here. Again, and it's 61% multi-leg. So yeah, definitely wouldn't want to probably do something with this one. We'll look at it again just for kind of informational or educational purposes. This does look like a roll, obviously closing out today, moving them out to next week's expiration. So that would technically be bullish, but again, deep in the money, big multi-leg percent. I'm not personally a fan of that. Let's see what else we got here. That the 130.60 call, that is very small premium, but see 100. Yeah, I mean, when it's so small, I mean, I like to at least see It just kind of depends. This is too small a premium to kind of consider it a whale. I'd say at least 50,000 on a trade, and it just kind of depends on that name as well too. Intel 50,000, it's a very reasonable premium, but like 50,000 on a Tesla, probably not that good. So I kind of like to think of it market cap. How big is that company? Intel's pretty big, but 50,000 is a reasonable price there. Let's see. I'm trying to find a good one for you. We can do the 9% in the money one, and oh, this one is very kind of all over the place on this one. Lots of little ask side spikes here. So you are seeing a lot of volume, and I do want to take a screenshot of this because this will be a good little educational example. So 9% in the money, again, tons of little ask side hits and candles. This, you would have to definitely wait for an open interest update on this one. This is very messy here. We don't know what's going to carry over, what's not going to carry over there. And again, kind of deeper in the money there. Yeah, I'm not seeing a bunch for Intel. These puts might be a decent option. We'll take a peek at them. Again, very messy tape here where you're getting a lot of volume spikes. You don't know what's going to carry over, what's not going to carry over there. And I think, because a lot of that volume, yeah, I mean, and yesterday here too, a lot of that didn't carry over. You see all those little spikes there, only 209 contracts carried over. So very messy tape here. Probably something I wouldn't want to try to chase there. I'm going to lower this ask side to just 40% to see if we can maybe find something a little bit more. I'm just leaving the premium open just so I can kind of get a full idea of it. So this one, I don't think we looked at that 12.2637.5. So a lot of volume today. This is 1,500 contracts. Yeah, again, another one you're going to have to double check that open interest. It's that volume is greater than the open interest, but again, you're seeing kind of 1,500 contracts here, 1,000 there, 1,400 there, and we did have 3,700 contracts. I just want to kind of zoom this back and take a peek. Let me do a little closer here. So, okay, we'll do 7 days. We can squeeze that in. So, like 1,700. There's probably some opening flow on that on our chain today, but again, you do have some previous flow here. I don't get the best confidence in something like that. It's not a very clean, clear entry there. So I'm going to tell you, I'm probably not seeing much on Intel here. Let's see. Let's look at our gamma on it, though, just for fun. Yeah, and our gamma, I mean, you're pretty in line with your levels here. You're not really seeing any divergence there. So I'm going to say I'm not really seeing much on Intel there. Good little name to get us started, though, there. Yeah, trading 0.65 times the 30-day volume. So, I mean, it's not a super strong volume day, about a little over half. So, yeah, not really seeing much for Intel there. Let's see what else we can find, though. Burlington calls here. Not coming in right at the ask. That is a pretty big bid-ask spread there for me. So it's definitely an opener, though. 500 contracts, 348 current open contracts. So definitely an opener. That 500 is greater than that. So let's kind of take a peek at this and see what we got, though. So I like this because you can see how that IV is rising that entire time here. That time is exactly to the second. Again, you don't 100% know, but a very educated guess. This is the same person. I would bet 99.999% this is the same person. Again, there's just always that one teeny small chance it's not, but when you do this long enough, it's just kind of a good visual. And if you add these up as well too, so you got 477 plus that 17, so we've got, what is that, 96, 496, 497, 498, 94. So 1, 2, 3, 4, 5, 6. So if this is all added up, this is 500 contracts. Again, just mathematically, if you're going to open a position, are you going to open 477 contracts, a very odd number, or does 500 sound a little better? Just, again, kind of using context clues, and it's just a screen time thing where you kind of set to figure this out after a while. But the one thing I don't like, again, that bid-ask spread, a little wide there. IV does increase, though. Your spot price does increase as well, too. So it does look good. I just don't like that spread. We are up 3.19% on the day. So let's see what else. ASTS. So next week's 12/26/84 calls. Again, next week we are closed on Thursday and we are a half day on Wednesday. So I would not be willing to swing weeklies into next week. Theta is going to be very aggressive. This is up 13% on the day. These are 13% out of the money for weeklies. Let's take a peek at the flow and see if we can actually catch any context clues here. IV stays up. This is not the first trade on here, so I gotta find that first trade. So again, this is where our whale starts to come in. You can see the repeated hits. You got your little lines here thing, whatever, siren looking type thing. IV spikes. That flow is coming in at the ask. Here it is, a little wider bid ask spread. Now at first glance, I would say these would read as a buy to me. The only thing I don't like about that is we are up 13. Now we're over 13% on the day. This is a weekly, and I'm going to pop this back one more time. Sorry, I got to stay back on that first page. Let's pop this into the option profit calculator and just kind of take a peek. So Monday is what, the 22nd? So on the 22nd, you're going to need at least a 5% move here to get 22% on those contracts. That's a pretty big move to get through that theta here, and that theta on these contracts is $25 a day. So you're going to lose $25 on those contracts every day if that stock doesn't move. So these would open up roughly at about $1.30-ish, give or take a couple there, if there was no movement on ASTS here by Monday. So it's kind of a big jump there, and that IV is a little more juiced here on something that's up over 13% on the day. You just kind of have, everybody wants calls on this name, essentially. You're up 13%, everybody's thinking, oh, we're going to keep going up, keep going up. So they're kind of paying up for those contracts, essentially. Not a fan of chasing stuff that's already made a big move. Something like this, I would maybe, if you liked it, you really like the flow, you want to try to capture some of the movement, take it as a day trade. Take it as a day trade. I just wouldn't want to swing a weekly over the weekend, especially going into a short week. So let's look at the 320.41 SMCI calls. Spots filling at the ask. Definitely an opening trade here based on that volume to open interest. Does overlap earnings though, so that is something to keep in mind there. We are up 5% on the day, 33% out of the money. I wouldn't consider this earnings flow. Obviously, earnings 67 days. These are about a month over that as well there. And let's just kind of look at our flow here. So this is not the first trade of the day. And how do I know that? You look at your size here. You already have 191 contracts traded there. So let's kind of take a peek here. Scroll on down. So when that flow starts to come in here, IV does spike. It's coming in at the ask. IV stays up that entire time. Looks good there. So again, one of those where you're seeing that net call premium kind of drop off as well there too, and put premiums up. You are up, or I mean, they're 33% out of the money, and you are already up 5.25 on the day. Probably something I wouldn't want to take, even if that flow looks good. Again, it's just kind of a screen thing, a screen time thing, just kind of understanding the market. I mean, like, I don't get a super good feeling about that, even though if the flow matches all my criteria. Again, you're up so much on the day already. These are pretty further dated here and a little far out of the money, so not a huge fan of that. And SMCI is, and it does overlap earnings. You just kind of have to keep all that into account there as well. So this one, BE, the 220, 135 calls. A little wider spread here. I don't like that spot fill there. It's a smaller size also. Up again, another one that's up pretty big on the day, and you did see a big drop in that net call premium, and put premiums are sitting bid side. Again, just because they're bid side doesn't mean that it's bearish or neutral. 54% out of the money in 63 days. That is kind of far there. Do these overlap earnings? 69 days. Nope, these do not overlap earnings. So I don't like this one, and why don't I like this one? Again, so it's coming in at the ask here. Then you have a drop in that spot. And look what happens at that drop in the spot. IV drops. Not massively, but there is a drop in the IV. That's something I don't like. These would look like short calls here to me. Selling the calls, short calls, whatever you want to call them. That, something like that I don't like. And then you have your premiums to kind of go along with that there too. AA, these ones pretty much, let me go back here, sorry. 220, 60 call. These pretty much coming in right at the mid there. Smaller size there, a lot of volume on the day. So again, just, I mean, you see all these little volume hits here on the day. Not a huge fan. I mean, you don't know how much of that's going to carry over into Monday. You have 781 contracts here on the big volume spike. 400 there, another 400 there, so 800 plus that one. You just have to, like this one, you'd have to verify that open interest, and just kind of looking at it too. I mean, 17% out of the money, that's not super far. You can get some movement on the contracts. But look at that bid side call premium here, and you're still getting ask side put premium with a lot of put volume as well. We will take a peek at this just for some educational purposes, though. It's coming down here. So you see when it comes in, again, IV spikes. It looks good. Spots filling at the ask. IV rises a little bit there, and your spot price rises. So, I mean, at first glance, they do kind of look like buys to me, but then you got a little bigger size here with that IV drop. I don't get the best feeling about those. Potentially call sells, again, something that's up big on the day already. Just not a huge fan of that. You're chasing. You can always find something better. And when I say you can find something better, I mean like yesterday. Like at the time yesterday. Let me pop this back here. When these NCLHs came in, you know that name isn't up massively on the day. You're pretty flat on the day. So they're not chasing that momentum, or they're not trying to sell based off the big IV pump there. So that's something that sticks out to me. And again, kind of looking at this, and we'll do our flow recap here about a half hour, 40 minutes or so after close. It's going to be a quick one again, but I mean, like this flow yesterday, very clean, very easy to read here. And I'm going to remove that. Come on down here. And I mean, you just see, and that's not the same, it's not related at all. But again, when that flow starts to come in here, you can see that IV starts to slightly rise a little bit here. You get a small little kind of pullback, and then it kind of rockets back up here. So it looks good when that came in there, and you just kind of see all those little contracts. Actually, this came in a little later. Let me look at this one more time. Was that 12 o'clock, 12:10? Take a peek at that again. Let's do this. Okay, maybe not. Oh, here we go. So, okay, here we go. A little better view here. So, I mean, your IV spiked here. Drops a little bit here. At real time, it wasn't like that. I wish I had the real-time screenshot of it, because that IV, it started out at that 39.40. Or it was 34. Okay, we got to go back to that original candle. Why is it being goofy like this for me? A little bug or something. We're just going to go off this main page here. So, I mean, you can see how you're at that 43.35 when that flow comes in. IV spikes. Again, your spot rises here. So it looks clean that entire way up. I don't know why that other one's showing a goofy fill there for me, but IV rises, spot rises, looks good. And like that thing rocketed up today. I mean, over 100% on those. Like, that's what you're kind of trying to find there, where you can actually see that flow a little bit better. I'm trying to... Why is it goofy for me when I try to go back there? I'm just kind of trying to take a peek at it. So 12:04, let's just remove that time filter one more time. Oh, so, okay, the 11:13, I don't... That's so strange. Okay, must just be a little bug in there. I was gonna say, it wasn't showing that yesterday. But, again, flow made a good move up there. How are those iron puts doing? Are those put cells dropping a little bit here? 189 down to 177. That's a good sign there. And why do these look like put cells? Let's just look at these again here. So that flow comes in here. You see that IV decrease. So now this is the opposite of a buy, essentially. You're looking for that IV to decrease and that spot price to come in at the bid. So selling premium's a little different. So when you're selling the puts, it's essentially, it's not 100% bullish, because remember, this whale is trying to collect the premium. So if IREN moves sideways the entire time, they will collect premium profit. So that's why I don't always just say it's 100% bullish, but you can see that IV decrease when it comes in. That spot is filling at the bid, and you just kind of see that entire way up here. Again, spots coming in at the bid, very clean, looks good, looks like a short put there to me. Put, sell, short, put. You're 14% out of the money. More than likely that's not gonna be in the money. I mean, if it stays out of that 34, they're happy. So next question here, looks like we got, could you elaborate on the market tide for the afternoon? Commentary was warning of bearish activity, but looks very bullish to a noob like me. We can look at it. It fluctuates, obviously. You know, the market tide fluctuates minute to minute. So when I'm saying it's kind of bearish here, you're kind of seeing those call premiums starting to slightly drop off here. So you can see how we were kind of trending. We were ask side for most of the day here. Call premiums are kind of dropping off here. Your put premiums are dropping as well here too. So all call premiums here are still leading the way on the ask side here. Your major contributor to that is gold. So now if you removed gold from this here, this would more than likely probably be a lot lower here. So we'd be sitting a little more bid side there. Bid side, I'd say it's more, I shouldn't have used the word bearish on it. It's more neutral to kind of bearish there, more choppy, bearish, if that kind of makes some sense there too. But, I mean, you're kind of seeing your premium starting to kind of drop off there, slightly drop a little bit there. Hopefully that kind of answers your question a little bit there. But, I mean, it's more neutral, the bearish, I'd say, because you're not getting a ton of put premium coming in here. Tesla, again, is your only big name kind of contributing to that top net impact there. But just kind of looking at that price action throughout the day, too, you're more than likely not going to see a massive push up now from this level unless you get some more contributions here from some bigger names pushing that premium up. But, like, the one thing I like to kind of look at it, and I wish I could go into more detail on the market tide, like in real time, but obviously, updating it every 30 minutes or so, I can't dive into every single little teeny detail. It's just kind of a little outlook. Like if I removed, again, like GDX here, that the major contributor here, you're going to see that call premium drop there. You are getting a lot of call volume though, but again, just because it's call volume doesn't mean it's bullish. You can sell calls at the ask too, obviously, but so hopefully that kind of answers your question a little bit. So it's just kind of a visual thing. You just have to kind of watch it, and I mean you'll like see SMH is now getting a lot of kind of call volume spike there, and you see how that out of the money call just kind of slightly ticked up. It's not massive tick ups there, and that out of the money kind of dropped a little bit there too. I mean it's changing second to second, so I mean I try to give the clearest picture and just kind of what I'm seeing and maybe anticipating a little bit too. All right, so the Tesla 370 put for 12.26. Let's go take a peek at that. Yeah, sorry for the long explanation there, Gordita, but I mean it changes It's so hard to just kind of give that straight, direct answer on something like that. It's so fluid and changing. I gotta grab a drink here quick too, and then we'll look at Tesla. All right. So the Tesla 370 for 12.26. 370 put. So this one, okay, you're 23% out of the money. It's a weekly, so again, kind of remember what I was saying about how it's a short week next week. Data's going to be a little more aggressive. 23% out of the money for a weekly is kind of far out of the money there, a little too far for me. This is 18,000 against 2,900 open interest contracts. Definitely an opening trade. I can 100% tell you that. So these Tesla, I see a lot of these kind of far out of the money weekly puts a lot. These are almost, I don't want to say junk because you just never know. I mean, Tesla could release news over the weekend, 500 Teslas blew up or something. You just never know. But for the most part, just kind of looking at this. And the IV will always typically look good on these as well, too. But being that far out of the money, these are yeah, see, if you're treating it as like a little lotto like that, great. I just wouldn't do a full big position. This is almost more of a premium grab here, and it looks different too because it's kind of coming above the ask. It's really not coming in above the ask. There's an article, I'd have to go find it in here, but there's an article that kind of explains how those positions are created when they're showing above the ask there. It doesn't mean anything. Doesn't really mean anything. So don't take it like as anything more like, oh, it's coming above the ask. This is massive. Let me see if I can above ask. Okay, here we go. I believe Snorlax wrote this here. So I'm going to drop this in the chat just so you can kind of read it in your downtime there. But, I mean, it kind of explains different things in here. And, yeah, this is that one right here. So, it kind of explains it. Again, I read it in your spare time. I'm not going to take up time in here to kind of read an article when you got it right there. I know you can. I know you know how to click on it. So, but yeah, like this, you're so far out of the money, 23% out of the money a weekly, and just kind of looking at the. Oh shit! I gotta go back here. Calculator. These would have to move theoretically by the 20. God, I don't even know my days. The 22nd. You would need at least about a 10, well, to even be slightly not and 38% down is big on those. That's a 5% move, and you're going to still be down 38% on those. If you get a 10% move down, hey, you'd be up 187%. Again, you just never know. I mean, like, again, like I said, Tesla could come out with news, something happened, you just never know. But, like, you look at the theta on these, you're going to get 7 cents a day on theta on these. So, theoretically, Monday, if we showed no changes in the price or anything, you take off 14, these are going to be about 2 cents a contract, so they're essentially going to be worthless at open. So that's why I kind of say it's more of a premium grab there on something like that. And again, that just comes with a lot of screen time and just kind of understanding it. I have seen it happen though, like where you see this really odd flow kind of like this, where you might get 3 or 4 cents on this. It's something I'd maybe, I mean, if you really, really love the flow, I mean, something like this, a day trade, I would not want to swing these over the weekend because you are going to get crushed theta-wise. And kind of paying attention to those, like, Greeks, too. Like, if you got a question on, like, a piece of flow like this, like you see all this, and 287,000 for over the weekend, it is a kind of a little smaller. It's big premium, don't get me wrong, but for over the weekend on something like this, it kind of just screams premium grab to me on that. You can always just pop it in that option profit calculator, especially with spreads. I'm not the best spread trader. Like, you can just pop it in here. It'll show you what you're specifically going to more than likely be at if that price didn't move. And then you got your Greeks down here. The Greeks are really big to pay attention to with contracts. Further out contracts, not so much because theta's not as aggressive, but like this, your delta is not, I mean, when I'm looking at contracts, I like to see that delta at least like a 20. So essentially that's just telling you if that stock moves $1, that contract's going to increase by $20. So if the contract was at $50 and that delta was 20, contract's going to be worth 70 at that time. So typically with that, as you get closer to the money, your delta rises. So, and if you get into the money, your delta really, really increases. So the highest your delta can go is 99 cents a contract. So essentially $100 a contract. That's very deep in the money though. So theta, the further out you are, so this kind of comes into mechanics with the contracts. The further out you are on contracts, the less your theta is. So theta doesn't look like it's a lot here, but these contracts are so far out of the money and they are weeklies, you're not really going to get anything out of something like this there. So hopefully that kind of makes sense there a little bit. I should do a video tutorial on kind of Greeks as well here. So let's look at KRE 66 put for 1226. Let's see, missed the first hour, accidentally slept in, so I've been yeah, no, that's usually what most traders will do. They'll kind of, I don't like to say it, but, force themselves into something. But let's take a peek at it for you. I hope that kind of explanation on Tesla made a little sense there, though. 1226. Not 12.6, 12.26. So 2% out of the money. This is a lot more favorable. This is something that you can essentially, see making a move. Little smaller on premium, but KRE, again, not like it's Tesla or anything. Let's look at our flow here. So you got 2,200 contracts. Definitely an opening trade. Let's take a peek here. So this one, and again, just because my rules are, they don't always match, like, I'll show you exactly what I mean here because it's a good example. So this one, and I'm going to grab a drink. Man, I'm losing that voice already. So this one is interesting to me. So you had all these contracts kind of start at 2 o'clock here. So a big chunk come in here. So again, educated guess that this is probably the same person, at least at 14:01:27. Definitely the same person. IV spikes when that comes in. Looks good. Spots filling with the ask. Great. So we have this next trade here, the one that you wanted me to really look at there. IV spikes here. It's a repeated hits. Spot is filling at the ask. So this is where I kind of I don't like the flow. And again, this rule doesn't always mean it's not going to work, but you can see how that IV kind of decreases here at the end. That's something I wouldn't post that just because of that. And you can see it kind of even decrease here a little bit more, and it kind of hits the bid there as well too. Now 2% out of the money, that's not horribly far out of the money for a weekly. And these are filling at the ask the entire time. So like this is something I would throw in that risky flow channel. Like it looks good, like your spot's filling at the ask. Looks good the entire way up on this side. Now your IV, it drops. So I mean that's kind of where it'd go in that risky flow channel there for me. And again, just because that IV's dropping doesn't mean that flow won't work out. Just because the spot's rising or spot's filling with the ask, again, it doesn't mean it's going to always work out. So that's kind of why you got to have that little risk management in there too. And I just want to take a peek at, see what that looks like too. I just want to, so Monday the 22nd. See, like here, if you have a 1% move down, you're going to be up 30% almost on those contracts. It's a lot more forgiving than like that Tesla there, where you need a 10% drop to see some profits. And like this one, this is a better delta to theta here. So you can see it's 27 cents a contract, easier way, $27 a contract. And your theta is 4 cents a contract. So you're going to only lose, if this name didn't move any more over the weekend, you're going to lose $8 on a contract. That's a lot better than losing essentially your entire value. So $8 a contract. I mean, it's a pretty big hit on a 34-cent contract there. Would bring you down to 26. Yes. Okay, my math. So I mean, it's kind of a bigger hit there, but you're paying for kind of being closer to the money as well too. So thankfully, if they go in the money though, you're gonna see a pickup there, and you can see if you get that 1% drop there, it would help you out a little bit too. And your net premiums here, so those calls did rise and then massively drop there. Your just puts are kind of flat there though, but 2% out of the money, not horrible. I would say I don't mind this flow. It's just that IV part that I didn't really like on it. The weeklies over the weekend thing, and you'll learn this as you kind of continue to trade. I'm not a big fan of swinging weeklies over the weekend. Just, again, you have 2 days of theta decay. You don't know what's going to happen over the weekend. Something big can happen over the weekend, just macro-wise, and stocks could tank, stocks could shoot up. You just never know. You have 2 days where you can't control those contracts, and as a trader, I want to be able to like close my contracts as soon as possible, take profit, whatever. Like at least if it's overnight, I can at least kind of salvage whatever that is that next day, versus being kind of stuck in something for 2 days and I can't do anything about it. But that's it. That's a good example there. That's one that I would probably throw in that risky flow area. All right, let's see what else is coming in. See if anything else is coming in. Yeah, a lot of good educational questions today, you guys. Really good. really good. Let's see. Some Nike puts here, so let's look. We'll do the NBISs because those are actually coming in at the ask here. Actually, we're going to do the BACs first because those actually look good just off the bat here. Spots filling with the ask. Good size, pretty good premium, definitely an opener. Man, I've drank like 7 of these bottles already today. Whoops, didn't try to smack the mic. So 1% out of the money with 14 days. Now, what I'm seeing here is, okay, you're up about 1.5% on a day, so you know this person's not chasing momentum. Net call premium really dropped off here. Put volumes picking up. Put premium just slid over to the ask side, so really good sign there. Now let's look at the actual raw flow. So this is good flow. I'm gonna actually post this as a flow. This looks pretty good to me. IV spikes when it comes in. That spot is filling at the ask. 1734 in that IV that entire way up. Spot is at the ask. This flow looks really good to me. This is gonna actually, I'm gonna post this into our alerts here, and it's kind of dropping quick here. So let me get that in there quick. So like that's a really good piece of flow there, and you can see how quickly, like I didn't have to sit there and do surgery on the flow to make it kind of fit my standards there. Let me throw this in here quick. In 14 days, you don't have to worry about them expiring next week, which is nice. And they are only 1% out of the money, so really good there. Like example here, let's go back here. Switch that to the table. Starting on, Monday, you're down 1%, you're up 25% on those. And all the way out to the 26th here. What's the end of next week? So Friday next week. If BAC moves down 1% by Friday, you're going to be break even on those. So you're a lot more safe buying a little longer time on something on those short weeks. And you're down 2%. Those contracts are up 87%. That's you're buying time. Like the contracts are a little more expensive because you're buying for quality contracts. Like if we look at the delta and theta here, very good delta to theta, 37. So every dollar down on this name, that contract's gonna go up $37. Now let's go back to it. BAC 54.5. So this is obviously not a very fast mover. You're probably not going to see a $3 move on this name. You might see 60 cents, 50 cents, and you're going to get a pretty big move on those. So that's kind of why that delta is a little higher on that. So like if it's a bigger name like Coinbase, that delta might be like 5, and your theta's like 20 or so. But coin is like a $300, I don't know off the top of my head, I'm just guessing, $300, $350 stock, and it gets $10 swings. So that delta then is a little different versus something that's a slower mover like this. So that's a really good piece of flow, actually. So the NBIS is 12102 call. Again, right away, I'm going to tell you, no, you're up 15% on the day. Not chasing something like that. A little smaller size here, 13% out of the money. Kind of far. That IV's probably elevated on these. So again, just kind of looking at it. So all the same second timing here. More than likely they are. And this bid here, I'm make a very educated guess that ask the entire time would be that 175. It's only one contract anyways. There's nothing in here telling me in that one contract drop on the IV there. There's nothing in here telling me that this is a sell at the ask. This is just, again, where screen time and time in the market kind of help you. You're up 15% on the day. Do you really want to chase something like this? Even though it looks good, because let's, again, pop it in that profit calculator and it will help you out every single time. So that delta to theta, this is almost a 1-to-1 ratio here. So you're going to lose about $28 a contract there over the weekend. These are priced at 175, so not a massive drop. Again, it's still kind of sizable there though on a $1.75. I always say 175. I'm just so used to doing the price of the contract on that. And your delta's 22, so you're going to need a pretty big move to kind of get some profits here. And again, let's look at the table here. 22nd, 6% move will get you 59% on those contracts. So you're going to need a pretty big move to kind of secure something on those contracts. I'm again not the biggest fan of chasing something like that. Again, if you like something like that, treat it as a day trade. And again, that's not financial advice or anything. Just treat it as a day trade, and if it's not going to move on, because you're going to have to wait 2 days over the weekend for something like that to get a big move, and you got to hope for another big move on Monday, especially you got longer time on those there, but if they were weeklies. Definitely not a massive fan of that. Nothing really coming in there. Nothing major coming in here. Getting a lot of size contracts, but just not a ton of premium there. Expected with the holidays there. So that's nothing really coming in there. Those BACs, I want to see what these... You get a little pop there, of course. But again, I mean, you have 2 weeks on those, and they're not weeklies. Nike, this one, Nike's down today massively again. Multi-leg, you're under 10%. I kind of cap it at 10% there. So definitely an opening trade, though. That put premium slightly dropping off here. Again, 2 weeks out, you're down 11%. You might not want to chase something like that. But let's just look at the flow for some education. So let's see. So when that comes in, I mean, your IV spikes. Spot is, it's not a mid-fill, but it's very close to being a mid-fill. That bid-ask is 83 to 89. You're coming in at 87. It's more on the ask side, but... Oh, so then it does turn into ask side here when that IV increases. So, I mean, do you want to chase something that's already down 10% on the day? And then IV actually drops a little bit. Yeah, not on any major size, though. 89. So that ask is probably 89 that entire time there. But again, I mean, you want to chase something that's already down 11%? Probably not. Probably not. Let's see, what else do we got coming in? Yeah, just bad fills. Those Oracle 0 days, yeah. Something at open, I mean, you get a very quick pop, but it's like this is something risky you're grabbing. Right at open, I like to let kind of the market settle 10, 15, maybe 20 minutes, just kind of depends. Obviously, today you had data at 10 Eastern, so I mean, I'm waiting for that data more so. These T-gens were pretty interesting, though, for July. I mean, a lot of call flow here on those two names. I'm not a massive fan of trading names under $10. I'm not patient enough. But 99% of the money, that's almost a chase. But yeah, everything else on here, I mean, it's been pretty junky on the day. How's our tide looking? So, oh, Gordita left. Otherwise, I was going to tell him, see, you can see how it's kind of starting to drop now with the tide now there. I mean, your premium's still slightly dropping, and you're getting a small move down there and kind of slowly grinding down there. All right, what else do we got coming in here? Not much coming in. How's our volume looking on the day? So yeah, we'll get close to that 30-day average. You can see it's maybe 78,000 or so. Everything else sector wise, we're below. And next week, just be prepared. I'm just telling everybody right now, just next week's going to be very slow because, yeah, it's a holiday week. There's a lot of traders that will not even be there. Yeah, hey, see, that's all you need to do. Good find there. And you see what I mean there. Just because that flow doesn't always match doesn't mean it's going to not run. I mean, there's just different rules that you have to follow, like especially for me because I'm posting flow for hundreds of people, so I have to be very cautious and I need everything to kind of match. But again, just because, and even if it does match, it doesn't mean it's going to always run. So look at these gaps that hit. So a lot of volume on the day already. Let's just see if we can pinpoint something. So 1,400 there, another 900 there. So we're going to say 2,500 just to make it easy. Then you have about 2,000 there. One you'd have to double check that open interest on. I would take a very educated guess. So 14 plus 9, you're going to get 22 or so. This candle's 2,000. My educated guess would be ads here, but have to double check that on Monday to confirm it. So, okay, let's see. Do you think the volume is going to be low until the end of the year? Yeah. It's the last like 2 weeks, 3 weeks of the year. I mean, like our flow recap here is going to be very quick again, just like last week. I'll just do it on the bid side because we're probably not going to get much for that. I mean, this is going to be a very quick flow recap here, and the Friday flow, it's obviously not going to have made a big move there anyways. Those iron puts, iron kind of choppy there. I mean, for the excluding today, it's been very quiet this week, and even last week we had 3 trades on the flow recap. Like, there's just not a ton of perfect looking, good textbook flow coming in, and due to the holidays, a lot of traders taking off the month, just ending their year, taking their profits, spending time with family. It's the last month of the year, kind of from Thanksgiving on. It's slower. So, I mean, it's a time to practice patience and not rush into stuff just to trade. It's a big thing that people like to do is just rush into flow. They got to trade. They always got to trade something. You don't have to trade. I always tell people cash is a position too. Sitting on cash and preserving your cash, that's a position. You don't have to always be risking your money just to. That's a gambler's mentality. Like, obviously, I can understand, like, you want to trade a couple $20 contracts, great. But I mean, going full positions right now, and even like our flow and charts, I haven't had any good plays for this month at all. And it's not because I don't want to have good plays. There's just not a lot of good setups where I have the flow and the charts matching. I'm fingers crossed tonight, maybe I'll find something. But I mean, it's that time of the year where everybody's just kind of done for the year. They're counting all their profits and just getting ready for 2026. And there are some different things that go on around this time too. I mean, you have tax harvesting. I mean, people can be putting down floats to kind of, get a tax break and get some losses. There's that end of the year, and you have that rebalancing too for a lot of institutions and all that. So, I mean, I don't want to say it's trickier this time of year. It's safer to kind of back away from the market that last month or so. Like today, obviously, is option expiration day, and it's the largest one of the year. So that's usually you see a lot of volatility on these days, and we're actually not getting a lot of volume, surprisingly. I mean, 77 million for option. I mean, option expiration, like, let's see. So you have that 3 times a year. It's every quarter, that third week of every quarter. So January, February, the third week of March, April, May, June, third week of June, July, August, September, third week of September, and then third week of December here. So you're those are the three. It's called quad witching essentially. So your index funds, ETFs, all your contracts expire essentially. So you typically see a lot of kind of contract rolling out and different, different little tomfooleries and stuff like that. So I mean, I'm not a massive fan of those kind of 4 times a year. You just get a lot of volume around there, and just the flow might not be as clear just because there's different things going on within there. But yeah, that's a lot of good questions today. This is how I love the live streams, because you can actually learn stuff in here instead of just like, oh, look at this piece of flow. Like, because there's more to the market than just option flow. Like, there's fundamentals in the market, just how the market moves, and just, I mean, you can't just be singled in on one piece of data. Like, you have to kind of know everything as a whole there. So that's kind of why, like, I'll get on people on Twitter and stuff, and they're like, oh, this, like, you don't even know what you're talking about. Some people should not be posting stuff. Like, if you don't know what you're talking about, you probably shouldn't be doing this. Just kind of taking a peek here. And like the put sells too. Like, I'm gonna try to get some more of that premium collection stuff. It's just, there's not a lot of people that sell premium, so I kind of try to avoid it. I don't want people to get trapped in it just because I'm like, oh, it's a bid side put. Like, okay, well, it's gonna go up. Like, no, it doesn't necessarily have to do that. We'll actually take a peek at it here. Probably our last thing we'll look at here on the day. So like this, that theta's a little smaller on this one, but let's look at our table. So that whale, it's showing it, cause since it's a put, it wants it to go down. It's going to show it as a profitable trade by going down. They want it to go up, essentially. And it shows it as a long put there. I wonder if I can... we'll do short put and switch it. So here we go. So like here we are. So let's go to the 22nd. God, I keep the date 3 times here. So I mean, you'll collect some premium. It's a little slower process, but I mean, if this runs up 3% here on like Tuesday, I mean, you're gonna collect, and it looks different here too, because it's not the same as the actual. You want the stock to go up or chop, essentially. I was trying to think of a quick way to do that, but I mean, like, if you see, we are like they've collected most. I'm hoping this one makes a good. But actually, I had those Netflix calls. Let's see if I can go find them quick before the bell here. Netflix. Let me just go find it quick, and I'll show you a good example here. Netflix, what was that? The 12/26/97.5 call. 12/26/97.5. 12/26/97.5 call. So like this, yeah, we'll do 3 days. Like this is a perfect premium collection one. This is the one that I talked about on Whale Watch here. Like this thing, pretty textbook. IV drops. That spot's filling at the bid. Looks like a call sell here, and you can see how quickly that theta kind of decreases. So essentially theta is going to eat those contracts away, like Netflix is. I don't know what it's doing today. So Netflix up, like, let's look at just for the week here. So starting on 12/17, let's go to 12/17. So we're sitting at, and you can see we're kind of where that price went up there. We didn't get a massive move here. So 96, they're trading at 94. I mean, it's kind of a bigger drop there, but you can see how choppy it is, and that whale's still collecting premium because that contract is getting ate away there. And I'm going to pop it in the option profit calculator just to see how it looks. So like it's showing it's a long call. It's not a long call. a short call, and you look at the contract here, and it's gonna show a little different here. So like it's showing $7. It's kind of goofy when you're looking at the selling the premium part. I don't usually typically look at it for selling premium. But like your theta there, you're losing 6 cents a day, and it's a really low delta there. But looks like that is all. I am gonna get the names and our kind of final tallies here for the weekly flow, and then I'll be back on in about 40 minutes or so, and we'll do the quick weekly recap, and then that is it. So thanks for hanging out, you guys.